A very good morning, guys, and welcome to this live broadcast here at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Quick recap for you then of where we left off. We did see the Nifty quite high in trade, also hitting that 24,400 level sometime yesterday, but immediately wiping out all of those gains. We would say that index showed some nice recovery though in that second half as well, where we finally managed to close at that 24,316 levels, although there seems to be quite a bit of volatility and we haven't really moved past that 24,400 levels, just closing above that only on one day in the session. But remains to be seen. We are looking at a firmer Gift Nifty at this point compared to what the global peers are doing, because Wall Street, we saw the S&P 500 there seeing its worst days since April. So all of those cues is what is also going to be impacting the equity markets here, and of course all the macro data that is going to be coming in and the big earnings season that has kicked off. We're going to be discussing all that and more, but first let me take you through all the top headlines. The Nasdaq and S&P 500 sell off after hitting record highs. The Dow, in fact, closes with gains, while the Russell 2000 rallies as CPI inflation in June comes in at a 3-year low. Asian markets are trading mixed, with the Nikkei falling over 2% on a suspected yen intervention, while the Gift Nifty is also suggesting a lower start, or a rather flat start, for the Indian equity market. Crude prices have risen marginally to near $86 a barrel, whereas gold has surged past that $2,400 an ounce as inflation data from the United States sparks hopes of a rate cut soon. And TCS beats estimates in its first quarter earnings. Constant currency revenue has increased by 2.2% sequentially against the estimate of just 1.5%. Margins, though, have shrunk, but not as much as feared. The management says almost all verticals and major markets have returned to sequential growth. And HCL Technologies is expected to see a margin decline and a weakest revenue growth in the first quarter. However, the company is likely to maintain a 3 to 5% growth guidance for FY25, with deal wins expected to remain solid. 10 minutes to go there on your clocks, and we'll know whether the markets succumb further to that selling pressure that we've been seeing at the highs. 24,300 levels is where the Nifty has managed to hold on to, whereas the Sensex closing below that 80,000 levels again at around those 79,900 levels. But it was a broader markets where we did see some bit of outperformance compared to the benchmarks, with the Nifty mid-cap index also seeing some good traction. But it was the realty and pharma stocks that were the biggest drag in yesterday's session, whereas the oil and gas as well as media stocks were the ones that gained. So overall, you did have that rotation when it comes to sectorally where one needs to be placing their money. But if you look at the index future and option cues, where you're seeing the Nifty PCR now jump to about 1.29 versus the 0.97 levels, which means that there is still some comfort there for the bulls. Whereas if you look at the F&O ban, where no new stocks have been added or removed from the F&O ban list for July 12th, but continuing in that ban list are Aditya Birla Fashion and Retail, Balrampur Chini, Bandhan Bank, Chambal Fertilizers, GNFC, India Energy Exchange, India Cement, Indus Stars, as well as Piramal Enterprise and RBL Bank. So those are interesting cues to be watching out for, and why we need to see that these stocks continue to remain in that F&O ban, although they trade quite high in the cash markets. But talking about the cash markets and where the fund flows are really coming in, we did see domestic institutional become net buyers once again. About 1,676.47 crore worth of equities is what the DIIs went on to buy in yesterday's session, whereas the FIIs were net sellers in yesterday's session with 1,137.01 crore rupees worth of equity that was sold by FIIs in the cash market. If you look at the WIX, the India fear gauge, we would say that one has closed at that 14 levels, down by about 3.03% from that 14.43 levels that it was in the previous session. And of course, the big earnings that you need to be watching out for today The IT earnings continue with HCL Tech. You also have IREDA, which yesterday hit that 12% in intraday. This after its FPI holdings have almost doubled. So that will be an interesting counter to see. You also have Oriental Hotels, Whipple, as well as EMO Productions that will be putting out its number, and a whole host of others that will be putting out their numbers today. So we'll be tracking all of those in details. But first, let's also get across to Raja Venkatraman to discuss what kind of strategies one could adopt. He's the co-founder at NeoTraders. Good morning, Raja. Always a pleasure to be speaking with you here at Moneycontrol. Raja, what we're looking at with at least the benchmarks do at this point is there is that range bound or rather choppiness in trade with no big triggers. But if you have to look at how the charts are suggesting, one would say that, with that kind of last hour selling that we've been seeing in pretty much the last 3 trading sessions at least, it shows that there is that tug of war that is happening. But what, according to you, does this look like? Are we likely to see that 24,400 levels breach sometime soon, at least in the next 1-2 sessions?
Yeah, good morning, Stacy. Thank you for inviting me to the show. Now, when you take a look at the markets in this particular month have been pretty much range bound. And one of the key reasons have been the events towards the end of the month, and also the expectation from the Q1 numbers of this fiscal year. So when all these events are in play, people at this juncture or at this height of the markets, they are a little uncomfortable in taking a directional play. So that's what you are noticing, that even the bullish momentum is not sustaining, nor is the bearish momentum. Now, in such a scenario, when a market is in a range bound situation, it also calls upon us to step back a little bit and watch what is happening. So if you take a look at the macros, there have been only positive triggers. So at this point in time, we should not be thinking that it is the end of the road. Rather, I would say that there is lots more steam left in the market. It's just that it is taking a breather here, right? After running for such a upward climb. So it will definitely take a breather, and that's what the market is doing now. So at the lower levels, I would say 24,200, 250 is an important level, and we have been noticing that from there, the markets have been rebounding. On the upside, I would definitely wait for a closing about 24,500. And I do believe that today could be that day. And let's see, overall momentum definitely is on the positive side. But there is a caveat here that Bank Nifty, which all of us were expecting and cheering because it was in slumber for quite a while. Now, when it crossed 50,000, everyone thought that we're going to see some new phase in Bank Nifty, but that's not really happened. We are yet waiting for the Bank Nifty to kick in, and if we have some move above 53,000 on a stronger note, then I would say that the bulls are definitely in control. So overall, the bulls are in control. Yes, there are glimmers of hope for the bearish camp. But then I would say that when the markets are bullish and when, continuously the PCR does go below 1, and then in next few sessions it climbs up above 1. So that means that lower levels put writing is happening. Right. So when such a scenario is present, why to think contrarian? Because now those who were contrarian have not benefited. You can see from the entire June till now, all the contrarian people are waiting by the sidelines, waiting for the proverbial dip. But that's not going to come so soon.
Right. So you're saying no dip so soon. But like you mentioned about the Bank Nifty, in fact, yesterday, that was the one that really showed some bit of strength, we would say, while there was so much of profit taking that was happening. It has maintained those lower, higher formations for 5th consecutive session. And yesterday, it perhaps was the one that showed that good recovery as well, outperforming even the Nifty in yesterday's session. So within the banking space, and now that we've been seeing the likes of an HDFC Bank also somehow give that kind of push to the Bank Nifty as well as the index, the Nifty. Which of these components within the Bank Nifty space do you think are really something that you could be looking at right now?
Right now, I would be a wait and watch in Bank Nifty. I do not find any particular bank very exceptional, barring Federal Bank. Federal Bank is moving on from strength to strength, and for those who are active in the markets, they will be tracking Federal Bank. But then for those who are looking at the big private players, they would be looking at, say, HDFC, Kotak, IndusInd, ICICI. Those are not the ones that are moving. Actually, the second tier private banks are doing well. So if you really want to go into the bank Nifty as a whole or go to the banking space, I would go to the second tier private banks.
Right. In fact, yesterday Federal Bank was that one that really was the outlier, we would say. There is news flow also around that counter, and which is why you're seeing that see this kind of up move. Raja, do stay on with us. Let's get our viewers up to speed with all the earnings data that is trickling in. Yesterday, of course, we had TCS or Tata Consultancy Services put out its Q1 numbers. Now, on a sequential basis, the net profit is down by 3.2%, coming in at 12,040 crore rupees versus the 12,434 crore rupees. But the constant currency revenue, that was a great surprise, up by about 2.2% at 62,613 crore rupees versus the 61,237. EBIT is down by about 3%, but this is on expected lines, coming in at 15,442. Margins also are seeing a slight dip, and this because of that wage hikes that they took, which was in effect from April. So that one, the margins there at 24.7% versus a 26%. Now, what is interesting also is that the dollar revenue is up by 2.7% at $7.5 billion, whereas the net headcount addition they've done of about 5,452 personnel, whereas the attrition has also come down quite significantly to about 12.1%. Interestingly, when you look at the deals and the big TCVs or the total contract values, that has come in at $8.3 billion, and this from the North America business specifically, it's almost $4.6 billion. So there are a couple of brokerages, of course, that have come out with their notes on TCS. UBS has a buy call with the target. They've raised the target to 4,600 rupees per share. They see that it's a good beat when it comes to the Q1 numbers, and that perhaps also implies a recovery for the IT pack. Now, the management has gone on to show that the demand environment is stable with lower scrutiny now by clients on the ongoing projects, while that had been quite a concern on whether that demand and spending is really going to come through, and that with this kind of results shows that perhaps not so much skepticism. The company's generative AI deal pipeline too is at $1.2 billion versus the $900 million in Q4, which is something that they say is worth watching out for. Jefferies too has upgraded the stock to a buy with a target of 4,615 rupees per share. They see good return to growth in its key verticals, and especially other markets like India as well. The net hiring is also at a 7-quarter high, which is a good sign of revival. Now, the outlier here, one would say, is Citi, which has come out with a sell call on TCS, and they've kept the target at 3,645. They say the Q1 revenues have come in line, but this is mostly driven by the India region and other markets. Now, growth ex-India was just about 1.1% according to them, and the management commentary also is not something that they are too satisfied with, because they've said that it's too early to call if growth is sustainable. So that was all that we are getting to hear on TCS, and we'll talk more about that. But first, let's address our market open there for you. About 0.2% of gain for the Nifty, but not managing to touch that 24,400 levels yet. So opening is rather flat, we would say, but to 24,350 at least is what we've managed to cross, whereas the Sensex holding on to their 80,000 levels, we could say. So they're also about 0.2% of gain for the Sensex as well. So both of them with just tad bit of gains. The broader markets continue to see those rather outperform, about 330 points there for the mid-cap index. So you're seeing the mid-cap index continue there in the green, whereas the small cap as well seeing that good traction there, about 230 points there, almost 0.5% for the BSE small cap index. Whereas the bank Nifty, that one also seeing rather flat trade at this point. So that one also just about 0.1% on the bank Nifty. But sectorally, let's pull up a couple of these sectors. Let's look at pharma, because that's what we're going to be talking about in detail, because there is a brokerage note by Jefferies that has come out on the pharma pack. Trading quite flat, we would say at this point, but with a negative bias there for the pharma Nifty Pharma Index as well. What about autos? That one has seen some good swings in the past few sessions. We've seen the likes of an M&M really swing by, down by about 7% and then continuing to languish in yesterday's trade. So the auto pack also seeing that bit of pressure continuing for it. So that one continues to be in the negative. Let's also pull up all the gainers and losers for you then on your screens, and who's really helping the markets at this point. At least for the Nifty 50 pack, you're seeing the likes of a TCS there up in the green, of course, LTI, Mindtree as well as Wipro. So all of your IT stocks are what we're going to see really give that momentum to the Nifty as well. Tech Mahindra, Infosys as well as Shriram Finance, the other one there from the NBFC space. HCL Tech, after seeing that bit of, it did close in the green even yesterday ahead of its earnings, but Coal India and Tata Steel from the metal pack, that is also among your gainers. So pretty much most of your top 5 there at least coming in from the IT pack at this point among the Nifty 50 gainers. But let's also flip around and see what is really causing the pressure points, and that is coming in from the auto pack. We have the likes of a Maruti that is seeing profit taking. Of course, this after the stock saw some good rally the start of the week. You also have Power Grid and NTPC from your energy pack that you're seeing among the laggards. HDFC Life, Sun Pharma and ITC as well among your losers in trade. But let me go back to Raja and get his view on the IT pack, because that one clearly today is today's hero, we would say, after those earnings which are showing some bit of recovery. And we did put out all of what the brokerages are thinking about TCS in particular. But now that we know, rather they've given us a road to where we're looking at what we could expect from the IT pack, some green shoots rather. Would you be saying the same, Raja, and which among the IT stocks would you prefer at this point?
Yeah, yes, I would like to go with the results flow rather than going, stepping ahead and taking a position ahead of the results. And when I take a look at the results and especially when TCS has come to a very important stage right now as far as the movement is concerned. So any move above 4050 would be a very good opportunity to get into TCS. And it's been a 3-month sideways consolidation. The lows have been bought into, and a breakout above 4050 is critical for TCS to sustain the higher levels. So I would wait for a closure. I would not hurry into the IT space, because the IT space overall has been languishing, and I would not, venture into the bigger names. Yes, but the lower levels are definitely doing well, and if you have to look at some lower levels and participate, then I would definitely be a buyer in Persistent. Okay. Persistent Systems is a very good mover, and Persistent mover, LTIM, Coforge. So these are the names which I would be participating in rather than the bigger ones.
Right. So look at the mid-cap space is what Raja is saying, at least when it comes to the IT pack at this point, and take them with each earnings that they will come out to deliver. Raja, do wait on. We will try and get a couple of queries answered. But before that, like I was speaking about the pharma sector and what that one has been doing. In fact, we do have Jefferies that has put out a note based on the takeaways from the IQVIA US data that has come out for the particular sector. And they've given specific stocks that they look at and how they've been performing after the new launches, like if it has to be Zydus and its aggressive launch of the generic in Mirabrigon, that has reached about a 28% market share, which augurs well for that counter. They also say that the Indian generics are slow on the Revlimid, that one in Q1, that might not really show that kind of traction. So the likes of a Sun Pharma might show strong traction for its other drugs other than this one. Biocon Biocon too has gained share in a couple of its drugs that they've been putting out. So they do expect Q1 FY25, especially the US sales for these kind of drugs for the likes of a Zydus to be quite strong, whereas it could be weak for the likes of a Dr. Reddy, and Dr. Reddy in fact being among your laggards in trade also. But let's talk about more detail about this, and joining me for that now is Aditya Sood. Good morning, Aditya. Always a pleasure to have you with us here at Moneycontrol. We were talking about what pharma has been doing, and interesting as we get into the earnings season, that's somewhere that, you know, one would say maybe there is still the valuations not that high when you compare it to the likes of a banking sector or others, or even FMCG for that matter, that is actually the defensive that is coming to play at this point. How would you be looking at the pharma pack, and do you think that there is value and opportunity, and what would those stocks be then?
Sure. So I think so. First of all, let me confess that, possibly, people are looking at rotation in this market now, after, obviously, a market being at all-time high. If you look at the pharma complex, particularly, you can clearly divide these companies which are focused on the US generic market. And that is where, for the large cap companies like, for example, Dr. Reddy, Revlimid has helped them to boost the earnings. Now, there are two views here. One is that, companies who are overly dependent on a molecule, let's say Natco, is overly dependent on Revlimid. Typically, people are saying that, there is cash flow, but ultimately, you would have to discount the Revlimid opportunity in terms of, doing the NPV for Revlimid. So what we do believe is that, valuations for the sector per se, ex of Revlimid, are not very cheap at this point in time, but one has to take a view what is happening to consolidation in the US. And, I would just like to point out that if you look at Walgreens, which is one of the largest distributors in the US, is at a 27-year low at this point in time. So there seems to be an element of pricing power, which is returning to the Indian generic companies. If you look at the pharma complex, we like the hospital space. We don't like the valuation on the healthcare side. We like diagnostic names, so I would say that rather than looking at pure play pharma companies, one would have to look at, diagnostics and healthcare as an alternative. We also like MNC pharma here. I think so. After a prolonged period of 10 years, I think so, most of the MNC companies, so whether you look at GSK, or you look at Pfizer, or you look at, Sanofi for that matter, each of these companies are focusing more on growth. Last 10 years, growth has been very tepid for these companies. And what we believe is that, they are adding distribution muscle by having partnerships with the Indian pharma companies. So that is a space that we clearly like a lot.
Right. Aditya, what about banking space? That one also has seen quite some bit of swings, and we were talking with Raja earlier about, which components within that, or at least if you look at the bank Nifty, just those 12 components don't really show that much of, strength, except for maybe the likes of a federal bank among those. But do you see between the PSU and private banks, do you think that now is a good time to be looking at either one of them, and why would your reasoning be then?
Sure. So on the banking side, I think so it is a fairly simple call. 6 months back, we took a underweight stance on banking, and our logic was that, you have the third best credit growth on record. You had the best net interest margins, and you had the best asset quality, and something is going to break here. And this is what we saw, that Nifty Bank has massively underperformed the Nifty, and there was a lot of element of over ownership, particularly in Axis and ICICI Bank. I think so for last 4-5 years now in a row, HDFC Bank and Kotak have underperformed. So that is what is looking interesting to us. I think so valuations are much more reasonable after 4 or 5 years of very, very tepid returns. So that is one. I think so both these banks have got an excellent track record of managing cross-cycle NPAs. As far as Federal is concerned, obviously, there is a management change announcement which is pending on the stock, but Federal is also reasonably cheap. So our framework on banking is to look at smaller cap banks from a lens of more towards secured lenders, wherein ROE improvement can happen, and this is where we like Federal and CSB. Both these banks have got reasonable gold loan exposure, and that is a space that we clearly like. We like a combination of mortgage as a play, and that is the reason we like HDFC Bank here. We believe that this is this is a point in the cycle wherein we would be slightly skewed towards secured lenders versus unsecured loans.
Interesting. Do wait on with us. Let me, address a couple of stocks that will be a buzz news today. One of them being Adani Wilmar. Now, they have gone on to say that they like to acquire 67% stake in Omkar Chemical and Industries, or OCIPL. This is an agreement as a share subscription as well as a share purchase agreement. And remember, Omkar Chemicals is a Gujarat-based company, so there is going to be some bit of traction there coming in for Adani Wilmar after this news. But also, let's get a couple more queries addressed now, and Raja is waiting by to help you with those queries, so do keep sending them on our live feed. Let me first go by, since we're talking about the banking space, there is a query coming in from Anju. She wants to know your view on a Bank of India and what is that chart really suggesting?
Yeah, the entire movement in banking, like we discussed earlier, has been a more of a consolidation nature. And Bank of India, after the decline in the last 2 months, it's been undergoing some consolidation. But I would not be a buyer in Bank of India yet. I would wait for some more traction to appear, and I would wait for a crossing of 125 to participate. Till now, it's a wait and watch.
And watch, don't enter yet. I hope that answers that query. Let's take in one more that is coming, and this one quite interesting because IREDA will be putting out its numbers, but Srivardhan Gupta wants to know whether it's time to book profits on an IREDA when he bought this stock at around 200.
Yeah, so the rate at which he has purchased is quite interesting because it has given him some decent set of return. Now, when you take a look at the movement says that it's still not done with. So you can expect a target of around 320 here. So you can hold with maybe a trailing stop loss at 280 and continue to enjoy the ride.
Right. Continue to enjoy the ride. IRDA was, it in fact, gained almost 12% in yesterday's session. This after there was news flow that, FPIs have almost doubled their share in that particular stock. So it will be interesting to watch. But let's look at the telecom space. Now, Vodafone Idea again has received an approval from its shareholders for the issuance of equity shares, and this now through a preferential basis is what they're going on to do. But there's also a brokerage call on the whole telecom space and how they're looking at the likes of a Bharti Hexacom that will do well after they've gone on to buy more spectrum. There's also the likes of an Bharti Airtel that could see some bit of consolidation. So Aditya, let me get your view on the telecom space. What we've been seeing Vodafone do right from that FPO that it came out with, and the kind of fundraising that it has been doing in order to bring down its debt. Do you think that there is more room for one to be looking within the telecom space as well?
Yeah, I think so. Our approach generally has been to, stick with the leaders in this space, so we clearly like Bharti, because obviously, it is a very interesting play on telecom ARPU recovering. I think so. We are seeing a very interesting sort of event happening. India is one of the lowest ARPU markets in the world. And for the first time in many years, possibly after 2 decades, we are seeing some sort of pricing power in terms of, ARPU hikes going through. And this is the nature of the business. But what we like here is companies that will benefit from a telecom company's spending. So what we can clearly see is that, post the resolution of, Vodafone equity fundraise that is getting spilled over to Indus, because obviously, Vodafone was a holder in Indus, and, Bharti is hiking its stake. There's another, sort of space that we like here is the Tejas network, which is obviously going to be a beneficiary of BharatNet. So clearly, telecom is going through a capex cycle, and there are capex sort of beneficiaries here. There are companies which manufacture fiber optic cable. We like those companies. So, for example, Phenolix Cable or Sterlite Tech. So we would play telecom indirectly. The only problem here in terms of, the complex here is that if you look at the global valuation of telecom companies, let's say AT&T, Verizon, and if you have to compare global comps to Indian comps, stocks are slightly expensive. But if I have to compare them within the Indian universe, the valuation is reasonable.
Right. So valuation does seem reasonable within the telecom space, and you can see those interesting other stocks that you could pick within this, the broader telecom and fiber space. But let's get a couple more queries then. Raja, back to you. Pon Rajesh wants to know your view on Senco as well as MV Jill. What would you suggest for him, at least when it comes to Senco? We were just talking about how, the likes of a Federal Bank or CBS have good exposure to gold. But if you look at companies like Senco, what are the charts suggesting there?
So when you take a look at Senco, the overall momentum seems to be stalled right now, and I would wait for some clarity to emerge before I participate in the stock. So right now, I would stay away from the stock.
Right, so stay away from the stock. I hope that answers that query. Let's also take another one. Alex wants to know your view on Gland Pharma from a long-term perspective as well as on the fundamental front for this one.
Yeah. So Gland Pharma has gone through its share of pain, and what we are seeing right now is a nice move, and the pharma space as a whole is witnessing some move on the upside on certain specific names, and we can see that the pharma index also is moving higher. So all this is auguring well for the pharma. So now one should be taking a look at Gland Pharma from the perspective of a target of around 2200 within the next 3 months, and if you need to add on dips, the dip level would be around 1950.
Right, so keep that dip level in mind, and you can continue to buy that one, is what Raja is suggesting. Another quick query coming in from Ankit Bajaj. He wants to know your view on Angel One. This one quite interesting because we're seeing quite a bit of these brokerage firms. In fact, we had Anand Rathi's Q1 numbers also, which were pretty, stellar numbers, we could say the least. So how would one be looking at the brokerage space as well as Angel One in particular?
Yeah, the numbers may be stellar, but eventually if we have to look at the price action, they are not confirming that there is something positive developing right now on the fundamental front or on the participation front. So Angel One is avoid from my side. I would take a look at it sometime maybe later, but not at the current juncture.
Right, so this one again another avoid, so Angel One maybe not at this point. Aditya, back to you, and of course we are just a few weeks away, we would say, from the interim, from the full budget this time around, and there have been quite a few demands that have been flying high on what the finance minister could and cannot do. But what is on the expectation list that you are seeing that you could hear rather from the finance minister on July 23rd?
So I think so more of continuity of reforms is required, rather than anything which is expected to be big bang from here on. I think so if there is minimal tinkering on, the LTCG status for equities, or if the status of, unlisted can be tweaked, from 20%. Obviously, there is a 2-year long-term threshold for unlisted equity. That would be taken positively. However, one can expect, that a lot of future and option, volume is happening, and obviously, it is a well acknowledged fact that we have surpassed the S&P future and option volume in terms of number of contracts. So I think so definitely there are some, sort of something is there on the horizon, whether it gets, announced in the budget or it gets announced by the regulator needs to be seen. So continuity is what is expected. I think so more on the infrastructure stroke railway side, and the intention is very, very clear. But I think so what would be the bond market looking at would be fiscal prudence. I think so there is significant buffer post the RBI dividend coming through, wherein that can be used by the government in terms of, capping the, fiscal deficit target number. Clearly, there are lesser things to worry about from a macro standpoint, because obviously, the current account deficit and the fiscal deficit continues to be, well in control.
So given this kind of environment, where would you be placing your bets? What are the sectors that you are really liking, not just in the run up to the budget, but also post that for FY25? Where would you be placing your bets?
So financials is something that we clearly, like at this juncture because of relative valuation. We also like IT. I think so there has been a 5-quarter discretionary spending decline, and obviously ahead of the US elections, one is expecting that the TCV could move up, and this is very, very early signs post the UK elections, and this is what TCS also mentioned in the commentary yesterday. After a long period of time, we are witnessing hiring happening in this sector. If you look at the net adds that TCS has made, 5,000 odd. After a long period of lull, freshers are getting added, 11,000 freshers they added in last quarter. So IT, because of valuation, we like. We also like themes which are more focused on rural consumption. We do believe that, post-COVID, there are certain categories which are just coming back to that threshold. So we like themes which are focused on rural consumption. So that includes, some FMCG companies like Hindustan Unilever and Dabur, basically, essentially because they have focused a lot on building the rural franchise and improving the go-to-market in our down cycle. So that is what we like from a near-term perspective. We also like two-wheeler autos. Two-wheeler auto as a space has done, reasonably well, but we do believe that, there are legs to the rally. So auto is again a sector that we like.
Right. So, well, you do like financials, you said, IT, another one, consumption names, and also the two-wheeler auto space is what Aditya is looking at, sectors that will, run up this time around. Quickly, let me get another query from Raja, and this one from Debu K, and he wants to know your view on ABB. And of course, there is news flow. There's a double downgrade that has come in for that counter particularly. But what are the charts really suggesting? Is this an opportunity then to buy?
I would say no, because the price is going to witness some consolidation. The overall stock is definitely on a positive trajectory, and it's in a space which is having some witnessing some continuous demand. But this stock has been in a consolidation mode with brief upside seen post the election dip. Now, I feel that it could travel lower, closer towards the 8,000 region is where I would look to be buying ABB. It's still on the buy list, but at lower levels.
Right. So on the buy list, but wait for it to go lower is what you're seeing that counter perhaps react at this point to that brokerage downgrade that has come in for this particular counter. But we're completely out of time. So I'll have to thank my guests, both Raja Venkatraman as well as Aditya Sood, for giving us their time, speaking with us here, helping our viewers with their queries, as well as giving us some direction as to where the markets are headed. Right now, if I'm looking at the charts, we seem rather flat at this point. The Nifty really, there above that 24,400 levels that we wanted it to surpass, and it has managed to do that, about 100 points odd that we are seeing on the Nifty. The Sensex also above that 80,100 levels. So we have taken that positive start, we would say, but we still have the rest of the trading day to go ahead with and see, and hopefully that last hours of selling pressure that we we've been succumbing to, that shouldn't be the case in another trading session as today. It is a Friday. There is an orange alert that has been announced for Mumbai. So those who can stay indoors, we would request you to do that and not venture out in this pouring rain. But for now, it's a goodbye from the entire team that puts this piece together. Thanks so much for watching. Do please post us your feedback in the comments and also follow us in the link at the bottom of your screen for all your other updates. Remember, today we do have HCL Tech earnings. The management will be speaking around 6 p.m. and we will be getting you their commentary live here on our broadcast. So do come back here at moneycontrol.com as well as the Moneycontrol app. I'll see you soon.